So we've had the big tech earnings season now for Q3 pretty much run and done through this past week. We saw the profits for the Q3 for Microsoft, Alphabet, Apple, Amazon, Meta, and a number of other businesses. And generally speaking, you'd probably say it was fairly underwhelming. Apple was the standout. Microsoft did okay, but Alphabet and Amazon disappointed investors. But I want to put a little bit of context around what we're seeing right now, because the share prices of both Alphabet and Amazon have really been smashed hard after their earnings release. And it kind of sniffs to me a little bit of an overdone reaction, a knee-jerk reaction, in my opinion, given the long-term potential for these businesses. But let's focus on Amazon for a moment, because Amazon, their forward guidance for the fourth quarter was lower than the market expected. Its earnings were essentially half what they were in 2021 and 2022 for the same quarter. So the market reacted negatively to that. But I think we need to go back a little bit and have a look and think about what Amazon's been doing over a number of years now. We won't need to go back to 2012, but if we just look at the last 4 or 5 years, Amazon's profit in 2018 was around about $11 billion. In 2019, it was double that. In 2021, it was up to $30 billion. So what we saw when the pandemic hit, it wasn't through Amazon's planning, but Amazon, being an e-commerce business, was perfectly aligned along with Alphabet, which was also a business that benefited through the pandemic because of the nature of the stay at home, work from home, play at home, invest at home, all of the things that benefit through the pandemic. Amazon's profit essentially doubled. And in the last 12 months prior to 2021, it went up another 57%. And it had this massive tailwind behind it that it ordinarily would never have seen. And therefore, we have this very high expectation as investors collectively that Amazon is going to continue to be able to grow at the same sort of pace or at an above average rate. And what we've seen is that tailwind that Alphabet and Amazon have, because you're going to remember Alphabet was a business that people are advertising online to capture people watching YouTube, capture people doing Google searches, all of the online advertising revenue that Google has. Amazon, of course, was getting all of that shopping revenue, the Amazon Web Services. People didn't want to go to the mall. They didn't want to shop outside of their home, so they're buying online. And we've seen a big drop off on that. So that's pretty obvious. We know that that has occurred, but it's also very important as an investor that you understand the businesses that you own. And when it comes to Amazon, I'm more than comfortable with what Amazon has been doing over the course of the last 4 or 5 years to set itself up to endure into the future. Now, Amazon doesn't pay dividend. It's barely got any cash ever. It uses all the cash that it generates to acquire other businesses, to build the Amazon conglomerate, to build the earnings and revenue streams for this business for the next 5, 10, 15, 20 years. So right now, when you look at Amazon, we've seen this very, very significant growth in the last 3 or 4 years, particularly the last 2.5 years. We've now seen that drop off. The revenue actually for Amazon was up, but the profit was not. And what we're seeing is all of this money that Amazon's been earning and generating, the cash flow, the massive amounts of cash flow, Amazon has been investing in itself to ensure its durability long term. So yes, we've seen the share price decline sharply after the Q3 earnings report. And we've seen the same thing happen for Alphabet. But when you dig underneath the surface and you say, hey, what is going on in Amazon? Are they wasting money like they are at Meta? Well, the answer is no. They're building themselves up. They're setting themselves up for the durability long term that is going to occur. For example, I'm a huge believer that the money is going to come back into technology. When this rally comes and the money will flood back into the market, technology businesses like Apple, like Amazon, like Microsoft, like Alphabet, like NVIDIA, like Micron Technology, like Adobe, these types of high quality technical businesses, technology businesses are going to see a huge amount of money come for them. Why? Because they have above average earnings. They have above average returns on invested capital. They have above average share buyback programs, and they are flat out above average businesses that are in the high growth industry that is going to continue to grow. Technology is going to become a bigger and bigger part of our lives going forward. And therefore, Wall Street, the leopards don't change their spots. They're going to come back for technology just as they did every year virtually for the last 25 years since technology started to ramp up. It is still going to continue to grow. All of the cloud services businesses, Azure, which is part of Microsoft, AWS, which is part of Amazon. Amazon has 37% of the biggest cloud industry. The fastest growing sector of technology in the world today is the cloud computing. Right? And the amount of companies that need to get data off servers onto the cloud is extraordinary. We've only scratched the surface. So am I concerned about Amazon's Q3 earnings? It was a little bit of a disappointment. It wasn't quite as good as what many of us expected. But Amazon is a business that is continuing to steadily build its economic moat, steadily build the ability for the business to endure and be durable over time. I wouldn't want to be in an industry where Amazon decides, you know what, I'm going to come in an industry and start to dominate. So we are seeing right now some of these technology businesses that have been the major drivers of a lot of portfolios for the last couple of years pull back somewhat. Apple's been lugged in there, but it just had a fantastic third quarter result. It will continue to thrive, as will Microsoft into the future, as with Alphabet, and Amazon will also as well continue to drive forward. They're not going to surprise us with better than expected earnings every quarter. They're every now and again going to have a disappointing quarter, as some of the businesses like Alphabet and Amazon did this time around. But when I look underneath the surface and I look at these businesses and say, what are they doing to ensure that business over time continues to get better? Are they still doing all the right things? And in my view, yes. Amazon has just simply had a situation where people are back at work, they're traveling, they're not focused on what's happening online and buying online. They're going back to the mall occasionally. They're still shopping online and growing that. But this business is going to continue to thrive into the future, provided it continues to put the cash that it generates to work in building the business that it has in the past. Andy Jassy, the CEO, is starting to find his feet there after Jeff Bezos resigned. That may be impacting things in the short term, but he's been there for a long time. He knows how that business works very well. So bottom line is, I believe when the rally continues and the money continues to come back into the market, it's going to come for technology. And if you can pick up some businesses right now, like an Alphabet, like an Amazon, like a Microsoft, many of these companies that are trading significantly lower than where they were this time last year, and you're prepared to be patient, you're prepared to have a long-term objective, then I think is a wonderful time to be an investor. But if you're thinking right now, well, I'll just put my money in the market and I'm just going to pick up a quick 30, 40, 50%, the probability is you're going to be disappointed if you're trying to speculate that way. But wealth, serious wealth, a lot of money is made through periods like 2022, when you can recognize some businesses and their durability, their economic moats, their ability to grow their earnings into the future, not at extraordinary paces, 15, 20, 30%, but if they can even grow at 7, 8, 9% and continue to be smart about the way they use that money and the way they acquire businesses and deliver share buybacks and pay dividends, whatever that may be, long-term, you're going to have a wonderful investment. So am I concerned about any of the earnings that we've seen so far this quarter? I'd be concerned if I own Meta, okay? Zuckerberg's got to pull his finger out and get that focus back on Facebook. With regarding Alphabet and Amazon and Microsoft and Apple and the other technology businesses we've seen report their earnings, no, I'm not. It was a natural pullback that we were going to see. The high that the pandemic gave those businesses was going to come back down, and it has come back down. It's now back to normal, and they've got to grind away and prove to the market that they still can be businesses that will grow their earnings into the future, and I think they will. So that's my take on things, guys. If you have any comments or questions for me, please put them in the comment section below, and I hope you have a wonderful Friday. Chew the Fat this afternoon, 4 o'clock. Join me. I've got a little story to share with you about what's going on in the United States over the last 20 years, what I've seen, what I keep seeing. And it's also happening here in Australia. 4 o'clock this afternoon. See you then.